Okay, so we're back, and this is exercise 5, which is the first of the advanced certification exercises in the 4491W for 2013, and that is the case of Mark Austin. So let's just go through this and talk a little bit about it. We got a first name, Mark D. Austin, U.S. citizen. There's the address. Date of birth is 2/14/39, so that makes him over 65. It's going to come in on a few things. He's got a job as a machinist, not totally and permanently disabled. No one can claim him as a dependent, not the victim of identity theft, but he is married. So that's going to come in a moment when we talk about his filing status. Sources of income, he's got wages, interest and dividend income, refund from a state or local income tax, which is only relevant if he itemized in a prior year. Then he may have a taxable recapture of part of that refund. Distribution from pensions and annuity, Social Security and railroad retirement benefits. So he happens to have railroad retirement benefits, which don't come up too often, but we have one in this case. He's got mortgage interest, real estate tax, and charitable contributions. So mortgage interest and real estate tax, pretty good tip for anyone that they're going to be itemizing. Not always the case, but something to look for. And he received the first-time homebuyer's credit in 2008. So in 2008, there was a very small window where if someone received the first-time homebuyer's credit of $7,500, they would have to repay it starting in 2010, $500 a year in most cases if they got the maximum. He does want a direct deposit, no U.S. savings bonds, no split accounts. We look at his information. We've got his Social Security card, his routing and account number, which we're going to enter on the main info sheet and on the tax return. He's been separated from his wife since 2006. They have not lived together since the separation. And their divorce is not finalized. They have 3 adult children. So if you notice, there's nothing on here that's indicating that he has anyone else living with him, so that keeps him from being able to qualify as head of household. So he's going to be married filing separately. His wife has also filed her return at itemized, so that means he's got to itemize, but I don't think it's a problem for him because he's got things to itemize. He received a refund from the State Department of Revenue of $171. These other figures noted here are going to be relevant in calculating the amount of that taxability. The taxability of that refund. He retired, and he's got retirement income, which we're going to see in a minute. And he's a part-time machinist, so he also has income from it on a W-2. This part about his annuity does not make provisions for a joint and survivor annuity. That's going to be relevant when we're calculating the taxability of that annuity. He made church contributions, which he has a statement for of $1,700. That's going to come into play on the Schedule A. He purchased the home on April 18th of 2008 for $134,000. He received the maximum credit at that time, which was $7,500. Those repayments started in 2010, so he paid in 2010, 11, and 12, $1,500. He's going to have, as you'll see in a minute, a $500 repayment for the current year. He paid $125 in personal property taxes, which will be deductible, and he wants to contribute to the presidential election campaign fund. So all of that has been put in on the main info, all his personal information is on the main info sheet, and we'll start working our way through the forms. If we start with this W-2, I usually link from the front of the 1040, but I really can't show you that using this browser. We're at the VCAM studio where they use Safari, and I don't know if it's the ActiveX controls, but I can't link directly from the 1040. But normally I would go to the 1040. Over to the right, you'd see a little icon, and when you click on it, that takes you to what you need for that type of income. For the wages, of course, we're going to the W-2, which I think is right here. Oh, sorry, wrong one. And we've entered the wages of $12,475 and put in the federal income tax withheld $1,248. If you notice, there was a discrepancy on the Social Security tax withheld. So you've got to check this box up here to take the calculation off that box so you can enter it as it is on the W-2. It's not going to have any impact on the tax return, but all your entries should be exactly as they are on the W-2 form. He's covered by a retirement plan at work. And he's got state wages and state tax paid of $896, which will be relevant when we start looking at his Schedule A, because that is going to be a deductible expense on his Schedule A. The next is his mortgage interest statement. That shows two items: the mortgage interest received here of $4677.34, and the real estate taxes of $2012.30. So it's easy to note that on one document you can have two relevant figures that you have to address, and we're going to address both of those. The mortgage interest received here on the Schedule A. Is right here, mortgage interest in points from Form 1098, not listed above. That's $4677. And then he had his real estate taxes on principal resident, which is 2012, both of which are coming from that form. I'm just going to jump down a little bit so we can look at some of the review notes and finish off with that Schedule A. Oh, sorry, I need to go back up for that. Here we go. So in addition to the things that we just talked about, we know that he made these church contributions of $1,700, and he paid $125 in personal property taxes, value-based, meaning based on the value of the property. So those two have to be added in on the Schedule A as well. That's $1,700, which is noted here. If you were to click on the icon link, you'd get to this Schedule A detail screen, where you'd enter the $1,700 here under cash contributions. So that's going to carry over to the front. And then if you notice, personal property tax is not listed above. So that was not listed on the other document, and that's his $125. So this is the breakdown. I'll look at it slowly till we get down to the total, which is $94.10. And that $94.10 should agree with the answer in the back of the book. The answer in the back of the book is based upon the 2012 tax law. So you're going to see some minor discrepancies that have to do with the difference in the exemption amounts and the tax tables. But in this case, with the itemized deductions, it's exactly the same. Okay, so I'm going to go back to those income documents. And we've got two items here. This one's easy to miss: the total capital gains distribution of $74.96 and the $148.53 in dividends. So again, when entering dividend income, I usually start from the income section of the 1040 and link over. So you see this 149, and you're going to link, and I think that's linking to... let's see if I've got it right. The capital gains, sorry, it's not the capital gains worksheet. Well, that's why it's a lot easier when you can link directly, I guess. Oh, I'm sorry. I don't know what I'm thinking. I should be going straight to this Schedule B, because the Schedule B is for ordinary dividends and for interest income. And if you look here, you have your Eubank for $149. Then he's got the capital gains, and that's going to link to that's going to go in on the Schedule D. And be entered here as a capital gains distribution of $75. Yeah, you can see I had to link to the scratch pad on that line, and that's putting the Eubank $75 in. Then we've got this first one, which is gross Social Security equivalent benefits. So the Railroad Retirement Board, back when the Social Security Trust was set up, the railroads had the political power to have a separate system, which is from the Railroad Retirement Board. So these, as you see, says gross Social Security equivalent benefits. And that's the total. So that's just like gross Social Security. And if you notice, there's also $750 in federal income tax withheld, and also these Medicare premium totals. So I didn't show it to you when we were on the Schedule A. You can enter these medical premium totals, but that's his only medical expense, and that's less than 10% of his AGI. So it's not really going to come into play. So I did enter it on the form just to show you. Up here, but the 10% of his AGI is 1645, so that gives him no benefit. So this number is not going to come into play in the calculations on the return. The federal income tax will, and so will the gross Social Security. When I enter the Social Security, I would link to it from the front of the 1040. I would link from here. And I'm not sure which one of these worksheets it shows up on. I think it's worksheet 1, but I'm not positive. Let's see. Yeah. So Railroad Retirement Tier 1 received this year. So Tier 1 is the equivalent to Social Security. There's also Tier 2 benefits, which is a regular pension, or an annuity, I should say. So that's coming here. The rest of this is calculating the taxability of that benefit. If you go back over to the front of the form, you'll see that figure coming over, and the taxable amount is $205. There's also this matter of the federal income tax withheld, which that has to go in on page 2 of the 1040, and you've got to link over to a scratch pad in order to show that. So you would come to federal income tax withheld here, link to the scratch pad, and enter it here. That's the Tier 1. We also have the Tier 2, which we're going to talk about next. So that takes care of that. This is the RRB 1099-R, and these are for, this is the pension benefit from the railroad. Employee contribution, contribution amount paid, and total gross paid. So all this will come into play on the 1099-R document, because you see that's an RRB 1099-R, and we'll calculate using the simplified method the amount that needs to be included as taxable retirement benefits. And then you've got this federal income tax withheld, which I'll show you here. I just entered that on that same scratch pad on page 2. If we look at the 1099-R, there's no RRB 1099-R that you'll see in here. So you're just going into the regular 1099-R. It says RRB line 7, which comes from here, the gross amount. So we type that in. Oh, I just recognized my own mistake. That federal tax should have gone in here on line 4. Yeah. That's my mistake. So the figure will be right, but it shouldn't go on that scratch pad. Instead, you should enter it directly on this 1099. So I didn't do that. If you look down here, this is the simplified method. So it's going to ask you the number of months the payments were received. So he retired in 2006, so we're assuming he had those payments for the entire time. Also, the cost of the plan of the annuity, which comes from that document, 15397. That'll go in here, and that calculates the taxability of that benefit. And you'll see that here. Okay. Our final document to address is the other 1099-R, which there's no federal income tax withheld, and that's a gross distribution of $268 with distribution code 7 shown. We're putting a 268 in line 1 and coding box 7 with number 7 and checking the IRA SEP or simple box, which you'll see is checked here on the example. Okay, so that takes care of the income section. We've got a couple of additional things to address. One is the repayment of the first-time homebuyers credit. You're going to have to add Form 5405 in order to put that in. It's a pretty straightforward worksheet. So it said that he got the initial $7,500. Entered the amount of the credit you repaid on your 2010, 11, and 12. So that was $500 per year for a total of $1,500. And if you notice, that's going to, if you do this right, it'll come down to this one, that your minimum you can pay is $500, which is going to show here and carry over to the back side of the 1040. Under the other taxes section here. The taxable refund, state taxable refund. So it says here that he itemized deductions last year. If he hadn't done that, then we would know this wasn't taxable. But because he did, you have to compute the worksheet for those taxable benefits. And I'm just checking. Once again, you can link to that normally, but I'm not sure which one it is when I'm going this way about it. Oh, here it is. It's going to link to this, the state tax refund. My mistake. So he's got a $171 state or local income tax refund from the prior year. These figures, the Schedule A income tax and general sales tax amount. The general sales tax amount, I believe, is coming from here. So is the income tax amount. And the total deductions of the $13,750, which you're entering here, is also coming from there. And that should, once you enter those figures, that'll calculate what his taxable amount is. Which is showing up here as taxable refunds and credits, etc. So the church contributions, I think I showed that on the Schedule A section already. So the next two things that we look at are the Presidential Election Campaign Fund and the routing and account information. On the main info sheet, You'll see the routing and account information entered here. You're also going to have to enter it again on the second page of the 1040. And here's the election for the Presidential Election Campaign Fund, which, in case you don't know, doesn't reduce his refund. It just means that he's making an election to allocate $3 from the federal government's general fund to that trust. So on page 2, you're entering the routing and account number again here. So his refund amount should be $2206. And you're going to see that's different than the $2297 that you're seeing in the back of the book. That's because the back of the book is based on the 2012 tax law. We already talked about his itemized deductions. His AGI will be $21,931, and that is matching what you'd find in the back of the book. So I think that pretty much covers him. I hope you've enjoyed this presentation. Thank you so much.